primarily what we've seen over the last 18 months is a global inflation outbreak. And therefore all central banks, most central banks at least, the vast majority of them have been hiking in synchrony, if you like. And consequently, it's the rates market that sees most of the volatility, and FX being a relative value game, there's not as much opportunity because all central banks are moving in the same direction at the same time. However, we're now entering a different era where gear changes are going to start happening, where different central banks will take different directions over the months ahead. And we have our eyes on the Bank of Canada and the RBNZ as the first two developed market central banks likely to cut before year end, cut before the rest of the pack, because ultimately in 2024 other central banks will follow suit. But singling those two currencies out, the Kiwi dollar and the CAD, for special treatment, if you like, over the course of this year, means both currencies, I think, are going to get very heavily sold into December. So we're negative, both currencies.
I think it's a fool's errand almost trying to predict what Governor Orr does. He's a little bit of a trickster. But the reason why I mentioned all of that, your differential, I suppose, activity as well, is the yen, because it's such a tricky currency to peg, and it's such a tricky rate to peg when you're looking at what the 10 years done just over the course of the last couple of weeks. We're pushing back on the YCC band, but you would expect that with the yield differentials being so favourable in a sense for Japan in terms of the US 10-year, that wouldn't necessarily be the case. So what's the dynamic? Is it people that are trying to test weather sun?
Yeah, it's certainly a major talking point right now. These leadership transitions at the BOJ happen so rarely, and I was covering the yen 10 years ago on former Governor Kuroda's first day in office, and I can tell you from memory he did not have a press conference on his first day in the job. So that's why today's press conference is an intriguing development. Let's see what's announced, but my suspicion is there'll be no fireworks. Having said that, thinking about it, it would be the ideal opportunity to announce a policy change. As you mentioned earlier, a lot of Western Europe is still on holiday. The JGB market will be closed when the press conference is due to happen. So it would be a great opportunity to just shock the market, and then, hopefully the repercussions will not be too severe, and it will take away all of the speculation and the pressure that could build over the next few weeks into his first policy decision. Now, I just flagged that as a low risk. It would be an opportunity, but I doubt that Governor Ueda-san will take the opportunity, because there's been insufficient time to consult the policy board. He's just been in the job since Sunday, and it would be out of character for the Bank of Japan to make policy on the hoof like that. However, I think, therefore, the most likely outcome is he will simply insist that the policy easing that he has inherited will remain in place. But crucially, though, he won't necessarily make it clear that the current policy settings themselves will remain in place. So you can ease policy and maintain an easing posture without continuing Governor Kuroda's previous framework to the letter. And that's the crucial language we'll be looking for tonight.